Eddie Ghabour joins us today. All right, you still selling, Eddie?
Absolutely, Stuart. Look, I've been coming on your show for years, and I'm very thankful for that. And you know better than anyone, I am a bull most of the time. And in November, I shared with your viewers that we started to sell out of high-risk assets because the setup was one of the worst we've seen in our career. And each day and each week that goes by, we continue to get confirmation of that. Look, all of our clients are long-term investors, but there are certain points in time in history when it's okay to think short-term. So we're not telling people to stay the course or it'll come back, not when the setup is this bad, because look, good companies can also go down by 20 or 30% in this type of setup. And nothing's going to change our mind until the dynamics change. And one of the biggest dynamics is whether the Fed is going to slow down their accelerated tightening during this massive slowdown. Jamie Dimon just gave out some strong confirmation of what we've been sharing with viewers, that profit margins are coming in really tight because of the inflationary pressure. And you add the Fed tightening on top of that, earnings are going to get worse and worse as we go through this second quarter.
There's a lot of talk about peak inflation, as if hitting the 11% rate that we just hit this morning, as if that's the peak. Do you think it's the peak? And when do you think we will hit the peak?
So I actually do think that we are very close to peak inflation, but here's the problem. This peak from a rate of change perspective is really high than what we've been accustomed to. So it's not going to come down. We can peak, but it's not going to come down in a way fast enough for the Fed to not have to play catch up. So we can have peak inflation, but it's going to be so sticky that it's going to kill margins. It's hurting the consumer. And again, this economic data is only going to get worse over this next quarter. So I think you'll get mixed earnings in the first quarter. Second quarter, as we've said, is really deteriorating at a very fast rate. And once the Fed starts tightening in May, I think is when you're going to really see this downdraft in this market.
Okay, we hear you, Eddie. We've been hearing you for some time on this, and you've been right. One last question. If I've got some money available for investing now, what should I buy today? What should I do with that money today?
We've been buying utilities, which we think is a great place to be in this environment. And we think that you can buy a diversified long-term treasury strategy because, believe it or not, we think when this data starts to come in, the 10-year note is going to plummet. We think the 10-year will be under 2% by the end of this year, and that would be good for a bond fixed income portfolio.
It certainly would. That'd be very good for it, I'll tell you that. All right, Eddie, great to see you, and we surely will see you again soon. Thanks a lot, man.